Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So you're looking at ETFs, you're going to have to be dealing with a little bit more variation because you're dealing with things that are swing trades. So they're going to take longer time to develop. They're going to take several weeks to several months to develop. So it's going to take longer, so you're going to find fewer examples. That's why I don't like to trade just one strategy. I like to trade a number of strategies because it keeps me more active. And I like to have continuation patterns as well as reversal patterns. For one of the things I wanted to show you guys here is that these are just two of the strategies that I trade. There's a lot of different strategies that I focus on. My market timing guide, which is my most recent course, actually goes into dozens of these individual types of strategies, and it goes through the building blocks in terms of what the pros are, what the cons are, as well as individual examples of both. And for each of the webinars that I do for ISE, I always have a special offer that is a lot less than you'll find off of my website. So you can get a pretty good discount on the courses. And this course is about 4 hours long, and it also has a textbook that goes with it. So it gives you the ability to print out an actual guide where you can flip through and look at the strategies and look at the pros and the cons and look at a template as well as individual setups that actually show you pros and cons, because there are always some cons on a setup. Some of the cons are just going to be more important than others are, and it helps you weigh, which ones are really the strongest cons and which ones are really ones that, you can still take this setup. It's just, it would be nice to have it, but if you don't have it, it doesn't matter as much. So that's what this course goes into, and that link there for the special actually gives you a discount on all of my courses that are through my website. So it's just tonihansen.com/special. Steve made a comment regarding he must have read my book because he asked if I watered my tomato plants, and I gave up on tomato plants this year because I was using a gardening metaphor in my book for it. But I had basil, and my basil plants are doing really well. Another question here, Berger asks for brokers. And yeah, I prefer MB Trading as my broker. And actually, MB Trading was the second broker I had. The first broker I had used the same platform as MB Trading, but MB Trading was the second broker I have, and I only had the first one for 6 months or so. And so I've known the guys that that own that brokerage for 13, 14 years now already, and I really trust them, and I like the platform that they have, and their commissions are very, very competitive. They have a nice demo, so you can just go check them out and see for yourself. If you go to tonihansen.com/MBT, it actually has a link for the demo and a special commission savings and such that I have with them too. So definitely, go check them out if you're looking for a new broker. We go through these here. Stan asked, is the two-wave continuation one applicable to ETFs only? Definitely not. You can use that on any security you're trading. I mean, I started in individual stocks and as a swing trader in individual stocks. And, of course, that was one of the first strategies that I really focused on developing on the swing trading side of things in those individual stocks. And one of the examples I posted earlier was actually one of the options that ISE has. I think it was CDD that we were looking at. And so that's the Canadian dollar FX option. So you can use it no matter what type of asset class you're trading and no matter what type of time frame too. So you can certainly see it intraday as well. I'm just scrolling back through here, so bear with me as I look at these. If you have any other questions, definitely feel free to post. We have about 8 minutes here still. Berger asks, am I using support and resistance levels? Definitely. Support and resistance is one of my 5 building blocks, and there's a number of different types of support and resistance levels. The momentum indicators and a lot of these indicators, oscillators, those are types of support and resistance. So like Bollinger Bands, for example, are one type of support and resistance level, the stochastics, commodity channel index. If you're actually swing trading and you are looking for an overbought, oversold indicator, the commodity channel index is pretty decent. If you're getting into, if you have a setting of 15, your period is 15, this is a swing trade again, not intraday. So if your swing trading setup, your period is 15, then it tends to oscillate between plus and minus 200. And so that can give you an idea of overbought and oversold on the daily charts. I like Berger's comment. I'm self-taught, so I must be smart. Actually, you know, I started when I was like very, very young 20s, so I really didn't have a lot of other obligations, and I pretty much lived at the computer, so I had a lot of time on my hands and was really fascinated with the markets, so I spent most of my time doing that. Didn't have kids or a house or mortgage or anything like that to worry about. I was finishing up college working as an archaeologist, and so I spent my evenings and weekends studying the market and then ended up doing it full time. Ivan asked if I use line graphs, and yeah, I do. All the examples I have here are candlestick charts, and I like candlestick charts just because they give me a very clear visualization of, you know, what's going on upside and downside action. But I use line charts probably most often on my tick charts, but yeah, I definitely use them. Thank you, Pierre. Which other of my courses is a good supplement to this course? In addition to the market timing course, I'm assuming, the 5 technical tools is basically my 5 building blocks course, and that goes through each of those building blocks that I'm looking at, like the momentum and pace, and how they work together to create different strategies. And it's basically my type of analysis, it lays out how I trade and my style of analysis. It actually has, the Market Timing Guide course here was built upon a little pamphlet that was like 70 pages that I include with my 5 technical signals course, and which is the 5 technical building blocks. And I had a market timing guide that was sort of a supplementary guide that actually is part of that. So you'll get that if you get the 5 technical signals course. But a lot of people wanted to see it expanded, and they wanted to see videos and more examples, and so that's where the market timing guide came from. There's actually an option if you bundle the courses, it gives you more of a discount too. But so that would be the one that I would consider like the core course, and that would be the one that I would say to focus on if you're just getting into this, because you're kind of getting a lot more of the background information. But the timing guide is really great if you're looking for individual strategies and you want to focus more upon some of the core strategies as opposed to just learning how these strategies are developed in the first place. Carl asked for swing trades, do I use basic calls or puts, or do I use spreads? I'm not a huge options trader myself, so I tend to stick to the basic calls and puts, but a lot of my clients use a lot of the different stuff. I've just never really gotten into options as much as I have the other things. I trade a lot of futures and Forex, for example, so the straight securities, ETFs, futures, Forex, even bonds are things that I tend to trade a bit more than options. I've always been meaning to get more into options. I just haven't ended up doing it quite yet. Steve asked, my Momentum's Gap course, is it really basic, or could it be added as a day trading plan? It's not basic at all. It's about 5 hours long. It gets very intricate on gap trading, and it is focused on a day trading techniques, but it also tells you how to use momentum gaps to position yourself into swing trades. So you're entering them with day trading type of signals, and it'll show you which ones you can hold on to for swing trades, which ones you can be more aggressive on and take as day trades, the different types of strategies that follow a gap. So no, it's not basic. But even if you're a new trader, you'll be able to follow it because of the terminology I use is just pretty simple. Do I think that standard indicators are a big distraction? I do, yeah. I find that a lot of people put so many indicators on their stocks that they start to rely too heavily upon the indicators and kind of forget about what's going on in the underlying price action in the security. So a lot of times if you kind of eliminate the number of indicators that you're using, you don't have to get rid of everything, but the more you eliminate, the more easily you're going to be able to read what's actually happening in price action, and the less you're going to second guess yourself. If you're going to use an indicator, you have to keep in mind that, like anything, it takes a long time to learn to know when an indicator is high in accuracy and when it's going to drop in accuracy. Even moving averages aren't accurate all the time, especially if you end up falling into a trading range. Then a lot of the moving averages will start to flatline or sort of squiggle back and forth, and they don't hold really well. So all indicators have periods that they're not going to serve as great confirmation tools to help you with the trade. So it's going to take time to develop that learning curve, and most people don't take the time. They swap back and forth between indicators too much. So you really want to avoid that and make sure that you're not overwhelming yourself. Well, we're kind of running out of time here, so let me take just a couple more questions, and I'll wrap things up. And if you have any questions at all, if you go to my website here, ToniHansen.com, there's an Ask Toni button up in the upper right-hand corner. So just go ahead and send me a question, email me there. The actual direct email is info@tradingfrommainstreet.com. So I'll type that in here quick too. And this is my direct email. So if you want to email me directly, that's the way to do so. Or you can contact me through the website, and they'll forward it to me as well. Thank you guys for all the compliments on here. I appreciate it. I'm really glad that so many of you were able to make it out here today. I have a couple of questions here. I'll answer really fast, and then I'll just let the rest go to email. And I do webinars for ISE about every 2 months or so, usually 2 to 3 months. And I always email out information on them ahead of time. So if you're on my email list, which you can sign up for at ToniHansen.com, you'll have an advanced notice of when the next webinar is coming up. So definitely check that out. It gives you a daily market commentary as well. Omid asked the criteria I use to find tradable stocks. When you're looking for a lot of the trades that I find, I actually use things like near 52-week highs, near 3-month highs, near 52-week lows, near 3-month lows. These kind of help me filter out what the strongest setups are, what the strongest securities are going to be. And so a lot of them, I'll use that. There's a lot of individual scans out there that you can use too. Gosh, there's so many these days. Trade Ideas is a great one. So it's trade-ideas.com, and they have a lot of great filters, especially for swing trades. So that's one worth checking out for sure. A lot of individual platforms have built-in scans too, things like greatest percentage gainers. That's a top one that I use for day trading. I use the percentage gainers. I also keep core list of things that have consistently been making headlines recently and consistently being some of the top stocks that are coming into play. And so I'll keep that in a market minder, and I'll flip through those, and I'll keep that updated as well. So that's another way that I'll do it also. Ruben asked how to access the online courses. You'll be sent a login URL. They process it and make sure that it goes through clearly, and they'll send you the login. So as soon as it's activated, it can take up to 24 hours, but it's usually much shorter than that. Using one or two indicators, if I were to choose which indicators to use, my two favorite are Fibonacci retracement and extension levels. Actually, some of these courses go into Fibonacci as well. So Fibonacci retracement and extension levels work really well, and also moving averages. So those would probably be my two most favorite. Martin asked a really great question. He asked, how do you measure the probability of your trading setups? And the thing is, each setup, the probability changes depending upon what those building blocks are that go into the setup. So a two-wave continuation pattern, for example, can have a lot of different probabilities to it depending upon what those 5 building blocks are. So you're actually measuring the probabilities of the building blocks in conjunction of that setup as opposed to the overall setup itself. That's what the market timing guide goes into. It shows you the strength and weakness of each one of those building blocks and how it affects the outcome of the trade. So there's not one specific answer to that. The momentum reversal and the two-wave continuation are the highest probability setups that I trade, where regardless of what those building blocks are, you have a strong setup, a strong pattern. But looking at the individual components of those building blocks are going to change what the probability of each of those individual trades is going to be. So trend placement, momentum within the strategy itself, those are going to be things that are going to affect the probability of the trade. Most of my trades, I generally don't take a trade unless I think I'm going to get 2-to-1 reward compared to what I'm risking. And that tends to be, I also like to make sure that it's going to be a strategy where I'm going to be accurate at least 70% of the time. So if some of the building blocks are going to affect that it's that, I'm not going to end up taking the setup. So you can adjust that to fit your own personality. Some people are going to be more aggressive, and they'll be happy with the strategy that's correct only 40% of the time, as long as they're making 10-to-1 on those 40% of the time. Me, I don't like to be wrong, so even if I make more, I like to have that confidence that my accuracy is going to be higher instead. So everyone's going to be a little bit different, and you can really manipulate which of those you're going to accept as a con or which you're going to accept as a pro. So I want to thank you guys for being here today, and for everybody for making it out here. And again, just email me whenever you have any questions that I might not have gotten to today. And thanks again, guys.
All right. Many thanks again to Toni. Thanks for sharing your insights, and thanks to all of you for joining us. To learn more about the ETFs we discussed today, please visit www.ise.com/ETF, and there you'll find more of the product info, articles, and a link to sign up for free trade alerts that can help you learn how to best trade these ETFs. These are actually great for investors who are new to ETF trading. We have a lot of resources available up there, so if you are looking to learn more about trading products based on these industries and markets, be sure to take advantage. If you have any questions or comments, please feel free to send an email to webinars@ise.com. Thanks again to everyone, and we hope to see you back next time. Take care. Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.